Hi, I'm Hannah Erin Lang. I am a personal finance reporter at MarketWatch, and I am speaking with author and economic commentator Kyla Scanlon. You've interviewed policymakers and Fed presidents. You've been featured in a number of major business publications, such as ours. And most recently, the Wall Street Journal referred to you as sort of the economic advisor for Gen Z, which I think is great. But I'd love to start by hearing a little bit about what drew you to economics and how you got your start as a content creator focused on the economy.
I majored in economics when I was in college. So I did econ finance and data analytics and tutored in economics. And then I had a summer internship where I was selling cars, and people would come into the car lot and not even know what an interest rate was. And so that was really when I became passionate about economics education and really wanted to focus on helping people learn about that. When I graduated, I basically graduated into the pandemic and went out to work for Capital Group in Los Angeles, but decided to refocus my efforts on economic education and started making videos around GameStop. And then things have sort of grown from there. I published my first book in May of this year and have had a lot of amazing opportunities to talk about the economy. And so it's been really wonderful.
You mentioned that experience at, selling cars and how that sort of shaped your desire to go into economics specifically. I'm curious if the pandemic played a role in that as well. I know that's when I was getting my start as a reporter, and kind of just a really fascinating time to be entering adulthood, much less, building a career. So I was curious if that played a role at all in sort of shaping your interest in this field.
Yeah, I think so. I mean, I think the pandemic was, this terribly devastating time, but it was also like a perfect natural experiment where we were able to see like the importance of supply chains, where we were able to see inflation in real time in a very big way, the importance of essential workers, the importance of properly taking care of the labor force. And so I think that was definitely an interesting time to study the economy, and there were a lot of good lessons in it. And we're still like learning those lessons now. So yeah, especially with the strike that started on October 1st with the longshoremen.
Yes, yeah, absolutely. It's fascinating. I remember, speaking with economists when all of this, sort of started, and lots of them having to remind me that, folks our age hadn't necessarily experienced a period of super high inflation before. So it was definitely an interesting time to be diving into all that and explaining it for folks. So I have to talk about the vibe session. That was sort of became almost a big break for you, I would say, so to speak, and became a really popular term to describe what the economy was experiencing in a certain phase of recovery from the COVID-19 pandemic. And I wanted to ask how you settled on that term, and if there was a point that you realized that you had created something quite big.
Yeah, so I first published the paper on Vibecession back in June of 2022. And that was kind of when inflation was starting to abate a little bit. We still had a strong labor market. We had relatively strong GDP. And so I think that was definitely an important time to be writing about that topic, because we had this economic data that was telling one story. And then we had, of course, consumer sentiment telling a completely different story. The vibe session as a concept really didn't take off until, I don't know, a couple months ago, just because this problem has been so persistent, where people are looking at the economic data and they're saying, well, why don't people feel good? Look at economic growth. And of course, there's a lot of lessons within that. Like, there are a lot of reasons why people don't feel good about the economy, including things like structural affordability, which is housing, childcare, elder care, etc. And then, of course, media sentiment doesn't help at all. And so I think that that is sort of the idea behind the vibe session. A lot of people, it's taken on a life of its own, which is interesting. And it can be misused to make people feel like they shouldn't feel bad about the economy. But it's really that there's just a disconnect between sentiment and data. And it's very important to understand why that disconnect exists.
Talk to me a little bit about, for those that are maybe not familiar with the term, what we mean when we talk about the vibe session and, why you decided to focus on sort of the vibes in particular, why the vibe session as opposed to a different term. I'd just love to go a little bit more in depth on that.
Yeah, I mean, I think for me, like I try to make words fun and try to make language accessible for people. And, consumer sentiment sounds a little scary. It sounds very detached from people, right? But vibes, most people are familiar with that concept. Yeah, a lot of people don't like that word, I found out, but
Mhm.
it's just like a better or a different way to talk about consumer sentiment. It's really the same thing as reflexivity from George Soros or Keynes and animal spirits, which more apply to
Mhm.
markets. But it's just like, hey, there's different ways to talk about economic terms that don't have to feel so
Mhm.
stuffy.
Yeah, yeah, absolutely. And the sentiment session, I don't think has the
Yeah,
same sort of ring to it. So
right,
that makes a
exactly.
lot of sense.
Yeah.
Yeah, so, I have to ask the big question that I'm sure many folks, might be thinking listening to this, which is the vibe session over? And why or why not, in your view, kind of at this point in time in the economy?
So this point in time, it's really difficult to separate data from what's happening. It's very difficult to separate economic vibes from political vibes just because we are going
Yeah.
into an election. And so the vibe session seems to be more about politics at the moment than about economics. Inflation has pretty much abated. The Cleveland Fed nowcast has inflation at 2%, which is the Fed's goal. The Fed began cutting rates. We got a labor market print on October 1st that does show that there's been a massive slowdown in the labor market in terms of hiring. But I think people are feeling ultimately okay just based on the sentiment metrics. So I think we're exiting whatever that vibe session was, but I still think that there's going to be a disconnect between sentiment and economic data just because of media and because of the structural affordability items that I mentioned earlier.
Do you think that we could be at risk for, another quote unquote vibe session going forward? Is there, risk of sort of another tranche in consumer sentiment? Or do you think that as, price pressures have eased, that we might be out of the woods in that way?
Yeah, I mean, like I said, sentiment is more so being driven by politics right now. And whoever wins the election, the opposite party will have a dip in sentiment. That's always how it goes. And so that could lead to a vibe session in some ways. But I think the interesting thing now we'll be figuring out now that we're in a rate cutting cycle, how that will impact how people feel about economic circumstances. With inflation, prices are still quite high, like the levels are still high, even though the rate of inflation has, of course, gone down. And so I think that is still creating quite a bit of pressure for the consumer, of course. So I'm not sure if we'll enter another vibe session. I'd imagine as such, but I'm not sure if it'll be the same one that we had previously.
And you talked a little bit about using maybe more accessible terms when we talk about the economy. And yeah, I definitely agree that there can be some sort of intimidating language and perhaps an overall kind of stuffiness when we think about, economics traditionally. And, I wanted to ask a little bit about your background as well. A lot of the folks that we speak with at MarketWatch, maybe they have worked on Wall Street or they have a PhD in their academics and economics, and you have a bit of a different background. I wanted to ask if you think that has helped kind of give you an advantage when speaking to certain groups about the economy, or how your own unique experience shapes how you're commenting and explaining the economy to everyday people.
Yeah. My background is definitely not like a PhD economist, even though sometimes I wish it was. But yeah, so like I was on the buy side for almost 2 years at Capital Group out in Los Angeles. So I did fixed income and equity research, and then I built out the investment education arm at a startup. And then, of course, I sold cars in college. I interned at an asset manager and have had the opportunity to work with a lot of institutions in my job now, like Bloomberg Opinion, have, written for the New York Times, the Financial Times. And so I feel like I've gotten a lot of traditional exposure, but of course, I'm trying to reach a lot of people and do that via social media because that's where people are. And so I do think having a more unique path with perhaps a less traditional corporate structure definitely helps in terms of creating that content, thinking about things through a wider lens, but have, of course, massively benefited from the traditional associations I've had.
Yeah, yeah, absolutely. I also wanted to ask about social media in particular, because a big part of your career has been content creation. And of course, we've been covering sort of the debate over the future of TikTok in particular, whether that app might get shut down in one day. I sort of wanted to ask how you think about longevity as it relates to a career in content creation, and if you're at all concerned about that.
Yeah, I mean, so for me, like, TikTok being shut down is just one of the avenues that I post on. So I post on Instagram Reels, I post on YouTube, I post on my newsletter, Kyla.substack.com. I have a podcast and I just wrote a book. And so TikTok is just one part of that. I think the more interesting question is not if TikTok will be shut down, but if people will start consuming content in different ways and like what AI will mean for content creation. I think there's like two ways that can go. Like AI will take over everybody's job, including mine, and people will watch an AI version of an economist explaining the economy. I think there's another route that I think is a little less probable, but quite interesting to think about, where people start to push back on short form content. They start to push back on the manipulations of the attention economy, and instead are like, okay, I'm going to take things a little slower. We'll see if that works, or we'll see if that happens. But yeah, TikTok being shut down would make a lot of sense. I don't think the platform is good for people. And I understand the hypocrisy of me saying that. I think the tough part about making social media content is you do have to go where people are. And it is a tool at the end of the day, but oftentimes people use the tool in bad ways. And I try to use it in good ways, but you're still participating in the same sort of dynamic.
You mentioned sort of a couple directions in which things might go. Are you sort of trying to think about that as you plan your own career in terms of how you might shift your tactics to reach people or try and find audiences in new places at all?
Yeah, no, definitely. I mean, I think the book was one way to do that. I really enjoy doing in-person events. So I've had the opportunity to speak at a lot of universities like Harvard and MIT and Berkeley, and want to, of course, do more universities across all, tiers. And I think that's like a very good way to talk about economics is sort of that one-on-one way in person. I think that a lot of people want in-person experiences, and it's a little difficult to design around those. But that would be the way that I think people are going to want to consume content moving forward, but we'll see.
So you also have mentioned in your content of the past few years, and it relates a little bit to the vibe session, but this idea that I think is really interesting, that perception sort of influences and shapes reality. And of course, we think about that in a lot of circumstances, but it's particularly interesting when we think about the economy in that way. So I wanted to ask about maybe some examples of that you've noticed over the past few years, and how you think we might see that dynamic take shape in 2025 or beyond.
Yeah, I mean, I think perception here can also be expectations if we're talking about the economy. So inflation
Mhm.
expectations has been something that the Federal Reserve is quite concerned about. And of course, that's how people think inflation is going to go. If they think inflation is going to be high or low over the next year, 5 years, et cetera. And Jerome Powell, who's the chair of the Federal Reserve, is very concerned about inflation expectations and mentions it in his FOMC pressers, because he's like, we need to make sure that people don't expect high inflation, because if they do, it could become somewhat of a self-fulfilling prophecy. That's also similar to like a wage price spiral, et cetera. So there are a lot of different ways that perception can influence the decisions that people ultimately make, especially when you consider the influence of media and social media. I think inflation expectations are just one example, but there's definitely a lot of them. Pricing is a big one. Home prices are a big one. Like if people think home prices are going to go up, they're going to try to get in sooner, versus if they think home prices are going to go down, they might wait. And so, yeah, there's definitely a lot of ways that perception will influence the economic decisions that people make.
I wanted to ask you this point blank because I feel like this is, one of the hottest topics in econ right now. But do you think that the Fed waited too long to cut interest rates this time around?
I know a lot of people think that. And I think the reason that they did 50 basis points was because they wanted to appease to that crowd. Um, I mean, I think they have a really, really, really hard job, and they have a really, really blunt tool that they have to do that job with. And I think it's not that the Fed waited too long or, moved too quickly even. I think that the Fed's toolkit is not addressing some of the underlying needs that the economy has. Rate hikes are ultimately a demand side tool, and like what we really need is supply side expansion in so many ways. And for them, they can't like go tell people to drill oil faster or to produce more crops. Like they just kind of have to nudge the economy in certain directions. And so and of course that's where fiscal policy comes in with the supply side tools. But I think that the Fed has a really hard job. I'm glad that they cut rates, and I'm glad that they did it by 50 basis points just because of the deterioration that we're seeing in the labor market. I think that is pretty concerning, especially for new grads. It's just really hard to find a job right now. And so I think that would be like my only comment is like the labor market has shown weakness, and like ideally they could have moved faster just to give the economy some breathing room. But I also acknowledge that their toolkit is quite blunt, and that their job is difficult.
You brought up these kind of supply side concerns a couple times now. I kind of just want to ask, when you're thinking about those kinds of concerns, what are the top ones on your mind, or what are the maybe largest issues on the supply side that you would maybe like to see addressed?
Yeah, I mean, I think for the consumer, it's housing. And
Yeah.
of course, like there's plans to build 3 million more homes. Like there's a lot of investment being done in housing, but it's just going to take a long time because it's a problem that's existed for a really long time. But that's
Mhm.
ultimately how people experience the economy is through the home, and through the foundation of what they're able to afford. And so I think that would be like a great thing to address. And there has been a lot of work to address it. But then, of course, you have to get into homeowners insurance, and like that's a whole nightmare within itself. Um, and so I think on the consumer side, it's housing, it's things like childcare. Childcare costs are up, I think, over 40% now since 2019. Elder care is on average $5,000 a month. A lot of those are labor shortages too. Like it's costly because we just don't have enough people working in those fields because of issues of immigration. And so in like regulation, et cetera, like it's quite complicated. There's a lot of red tape, and rightly so, because they are such delicate industries. You're dealing with children and the elderly, so you have to make sure everyone's okay. And then I think on like a broader perspective, the supply chain resilience is definitely something on the supply side that should be addressed.
I also wanted to ask you, maybe zooming out big picture here, and maybe going back to your days of selling cars, but what would you say is the most prevailing myth or misconception about the economy and the way that it works?
I think there's a lot. A lot of people think that inflation going down means that prices go down. And so there can
Yes.
be some like uncomfortable conversations, at least in the videos that I make where I talk about inflation going down, but people are like, why aren't things cheaper? And I think that can really influence how people perceive the economy because there's an element of frustration. They lose trust because they think, the news is reporting one thing, but reality is something entirely different. So they feel lied to. And so I think that's the biggest misconception that I've noticed amongst people. And it can really create a lot of distrust in economic news and in the economy at large.
Yeah, and sort of related to that, I wanted to ask you, why you think economic education as a whole is so important for folks.
Yeah, I mean, so I didn't know that you could even major in economics until I got to college. I didn't know it was a thing. And I had traded options in high school, but there had been nobody in my life who like was in finance. And I didn't know it was like a thing. And once I started studying it, I was like, oh, this is like fascinating. It's a study of money. And then
Yeah.
I talked to my friends about it, and nobody had any clue if they weren't studying it. And it was sort of the same experience when I started selling cars in Kentucky, where people would come in, not know what an interest rate was, and then we would sell them a car. And it would felt
Yeah.
so irresponsible to do that for them. And it wasn't their fault that they didn't know about economics. It just had never been taught. And the Council of Economics Education, which is a nonprofit doing a lot of work for economics education, has done a lot of amazing work, like getting economics into school. But I think for whatever reason, we pretend that people don't need to know about the economy, even though it's something that they participate in every single day. Like buying a cup of coffee is ultimately a huge interaction with the economy, the beans, the labor, the machines that make it, the money that you use to buy it. All of that has to do with economics. Buying a house is economics, getting a job is economics, everything. And I think it's really important that people know how economics works, because ultimately it'll help them make better decisions. It'll help them feel more comfortable in the system that they're a part of, and perhaps give them ideas for how to improve that system. You can't change a system until you understand the underlying components of it. And so I think that's why I focus so heavily on economics education, is I think we've done people a massive disservice. And then number two, I want to give people the tools that they need to change their lives.
Well, I wanted to wrap up and ask what's next for you, where you would like to maybe see your content creation career go from here. I know you published a book, but I was sort of curious if you had anything on the horizon or any ambitious further goals for the future.
Yeah, no, the book coming out was really fantastic, and making content on social media is great. Of course, like once you write one book, you always want to write another. And
Yeah.
but for me, it's just like I want to educate in as many corners of the world as I can. Do different mediums, like learn how best to do that. Make sure that I'm reaching as many people as possible in the most accessible way. And so that'll be what I am focused on over the next few years, is just how do you translate all of this stuff in the most accessible way for everybody.
Well, thank you so much for taking the time today. It's been great to hear your thoughts on the economy right now and how we can share economic education with folks across generations and in different corners of the country everywhere. So I really appreciate you taking the time, and I'm sure our readers appreciate it as well.
Yeah, no, thank you.